And hello, this is Remote Trading Room. I'm Bill Kaufman, and today we're going to look at the options, how they traded for the SPYs, the Qs, and the IWMs for the end of the week, August 18th of 2023. This is the simulated trading page for the Thinkorswim trading platform, but it's after hours now on Friday the 18th of August, and so these numbers are the exact numbers that the market finished with. We'll look at the SPY. SPY is the S&P 500 ETF. Let's go to today's stats. Calls over 8 million, puts over 11 million, PEC, put to call ratio 1.357. So 35% more puts than calls. Option time and sales. Well, let's see what they did. This takes a few potatoes to load everything. Let's see, I think it's still loading. Yes, it is. And still loading. There it is. And just a reminder, these are the time that a trade happened. The first two are the biggest for the call side, the largest for the put side, and this is the quantity, the price, the exchange, the market, delta, volatility, underlying price, when it happened, and the condition. So look at the biggest one. On the call side, 15 December 23, 470 called. 10,000 of them were sold for 3.46. Remember, that's per share. And each option contract represents 100 shares. So you got to multiply that by 100. And of course, then multiply by 10,000 to find out what they paid, which was a lot. Actually, they sold it, so they received a lot. But this was a condition of a spread. So let's see what 1234.52. Here we got a number of them. And they sold the call. And here's the 15 December call, that 10,000 of them, 470. And the 15 December 430 put, they bought 20,000 of those. So this could be simply they sold that to finance this buy, the 20,000, and kind of offset their price because it paid a lot. It's 1180 times 100 times 20,000. And you can see that there are two others in here, 380 puts. White is usually a sell. So this is, they sold at 10,000, they bought 10,000 at 470. That's the same one as up top. And here's another. Let's look at 31 August, 2 weeks away, 425 call, 425 put. They bought probably 10,000. That's the straddle. Just a little out of the money as far as the put side, in the money on the call side. So this is, they're not sure which way it's going to go. So they bought that and they bought that. That's why it's called a straddle. And look at these two, same time, 1309.13, 413 put, selling, 415 put. They're buying that, so that's just a regular debit spread. They bought these 9,000, they sold those over 9,000. Difference here is about 23 cents. So they're thinking by 15 December, the put should be, that SPYs are going to continue going down, and that will be making them money. They're the same thing, they bid some more. So, and if we go down here, we got the 18 August. Well, that's today, so won't worry about those two. And a week away. Here we go, 8 September, 5,000, 410 call, 410 put. This again could be just a straddle. They're buying each one. Paid a lot for the 410 call because it's in the money. Here the price right now is 436. They paid the 410, they paid for that, so not sure which way it's going to go. And here you have a lot of 18 August, that's today, 422 puts, paid nothing, 1 cent. Not going to worry about those. And here's one that's just a straight out 395 put, has no condition. So only a week away, so they're thinking they only paid 10 cents, it'll probably be going down. Here's another 400 put, 19 December of 2025. They paid a lot. 4,500 quantity, paid 26.35 times 100 times 45. But look at that. That's 2 years out. So it looks like majority options here point to market going down. Okay, well let's look at another one. Let's look at, get rid of this. Let's look at QQQ. QQQ. There we are. Invesco Trust, ETF. And we'll look at the stats. 3,600,000 plus calls, 5,300,000 puts. Put to call, again, put to call, about 46% more puts than calls. Let's see what they're doing, time and sales. All right, well, to give the market a little bit of time here, the computer to load up. And I'll give it another couple of potatoes. Looks like it's still downloading. Ah, there we go. Okay. Well, the biggest looks like they're 395 call, 335 put. They sold the call, bought the put. It doesn't say they're tied together. They're even here. Same time. Well, not exactly the same time. But I'd wager that this is probably the same company or entity bought these and sold these. Buying a 335 put. It's trading right now 358. So it's out of the money. Paid a fair amount. 395, again, out of the money call. So they sold that to pay for that. And that would imply that they believe the market's going to continue heading down. Look at this one, 8/11/26, these two. They say it's a spread, 365 call for October, 365 call for January. These two are in the white. White usually means they bought it. But this could be a calendar. This is taken the other way. They believe the market probably going back up. 365 and 365. On the other side of the coin, we got these two. 369 call, 357 call. These are supposedly outrights. They don't say condition over here. But it's always interesting when the time is the same. You look over here, it's the same quantity. Theoretically, it could be two independents made at the same time, but it could also be the color is wrong. It could be they bought this, or they possibly sold the 357 and bought the 369. That would be a spread there. If they sold that and bought that, that would think that it's going down. Or it could be the other way, where they bought that and protected to the upside. They sold this. So that'll be interesting to see what goes on. And then this one looks like an outright, 1306.49. Although it's not the same time. 355 put, 340 calls, same month, same year, 10,000, 10,000. No condition over here, but I would wager that this looks like they could have bought. This also could be a straddle. They bought the 340 call. They bought the 355 put. Straddle going each way. They're not sure. Kind of like a lot of people. We're not sure which way the market's going, although a lot of people seem to be hedging that it's going to the downside. Like here's a, well, that's not tied together either. But here's a 365 call. They sold that. 365 put. They looks like they bought that. Another. They believe the market to be going down for that to be profitable. So again, kind of looks like they're saying the market may be going down. So it looks like one more. This is the IWM, the Russell 2000 ETF. We'll look at the stats, calls, puts, not quite double, 1.94, 95% more puts than calls. So what were they doing? Time and sales. Give it a few, 1 potato, 2 potatoes. And, all right. A couple of big ones right there. Well, this spread 08/18/35, the very same time, spread by 2 weeks. It's interesting. Closed at 184. It's 181 put. Looks like they may have bought the 181. They sold the 185 2 weeks later. Well, this would really believe it may be going back up. Or at least it'd be a 185 in just under a month. Okay. On the other side of the coin, 633, same time. Month, year, 175 put, 173. Both in white. There's another two more. Yeah. Looks like they sold the 175, bought the 173. So this is where they believe it will probably be going. It's a credit spread, which implies this might be a credit spread also. Selling this, buying that. So they believe it will still be above 175 in October. Okay, let's see. We got some more that are. Here's a 17 November 175 put. It's in white. Probably an outright buy. They believe the market's going to go down. Same for the one above it. The September 175 put. They didn't pay much for it. For had something 2 weeks from now, it goes down some, they'll be in the money. And sometimes it doesn't have to go to 175, but if it heads that direction, that 52 cents might be worth 60 cents. And when you get 7,500 of them, that's a nice little pocket change. So this is, let's see, here's one. 25 August, 189 call, 181 put. Now this is where they're, it's kind of a, they believe it's not going to go above 189, won't go below 181 put in this 1 week time frame, in which case they would be able to keep the money. So that's it. Well, those are kind of like the 3 biggest ones. Okay, that concludes our little talk about the options for the 3 biggest ones for the week of 18th of August 2023. Hope you enjoyed it. Remember, this is for educational purposes only, and hope to see you at remotetradingroom.com.